We are live, and today we're going to talk about leverage trading. Can you make a lot of money from it, or is it danger? Can you lose a lot of money from it as well? Well, we're going to talk about a wide variety of topics when it comes to leverage trading, the good, the bad, and the ugly sides, and how you can generate that for your own profit. Let's get into it.
Hey, yeah. It's all about wealth engineering. Might be something that you're not used to. It's okay, cause I'm here to introduce you to concepts. Time to grow and make big moves. All about crypto, come see. Stocks and business, yes indeed. Got the info that you need. Hosted by my homie JC. Hey, yeah. Wealth engineering. Stacking it up. It's time to generate wealth. Till you living like Scrooge McDuck. Hey, wealth engineering. It's time to show you the game. Till you living like Richie Rich. Till you ballin' like Bruce Wayne. Hey, you ain't gotta be an expert, no problem. It don't really matter where you at, just start it. It'll take time, hard work, and
What's up? What's up, guys? This is JC, and welcome to the Wealth Engineering channel. This is where we talk about how to make, keep, and multiply money. Talk about a wide variety of topics when it comes to generating wealth, so that you can get to that generational wealth that we all are striving for, financially independence. And we talk about topics to how to get there. So shout out to you for everyone who's here, everyone who's supporting the channel. Make sure you hit the like button as you come in. And today we're going to talk about leverage trading. All right. So, but before I start, let me give a shout out to Peter Investor M, or someone who's joining the platform. Peter Investor M, shout out to you. Salute to you in the chat. Thank you for coming here early and supporting the channel. And today we're gonna talk about it. We're gonna talk about the market as a whole. As usual, I'm gonna do a little bit of reviews of what's going on here. So eventually, I'll share my screen. But great to get back. Great to be back. Absolutely, yes, exactly, guys. I've been very busy to say the least. But again, I'm always going to make sure that I can um, provide some value to you guys. And today I've been looking at the market. I've been here seeing the crypto market, and there's quite some companies that are going down. Right, it reminds me of what used to happen in 2008, where you had like big financial institution that would go down because of the not recession, right? Because of the recession. Officially, we're not in recession yet. We're supposed to have two terms of at least bad GDP performance, bad terms. For the most part, investors and strategists are saying that we could be already in a recession, but officially it hasn't been announced yet. But for us that do know what's going on, we're pretty much in a recession, and we're seeing the effect of that on big financial institution going down, especially in the cryptocurrency market. So that's a sign of it as well, and it had to do a lot with leverage. So that's why we're going to be talking about that. But before I talk any further, I see more people in. Please make sure you hit the like as we come in. You also share this video so that a lot of people can learn from it, because we're going to be talking about basically how to save money and how to multiply your income as well using leverage. So the good side as well, but it's not all good side. We're going to talk about the danger, because it could be very appealing when you hear the amount of money you can make if it goes well, if it goes on your side. But if it doesn't go on your side, you can lose a lot of money. And it could actually, for the most part, trust me when I say this is my own experience. And let me look at you in the eyes as I say this. For the most part, it could actually set you back a lot further than it's going to move you ahead. All right. So you're thinking about it, especially if you get successful on it once, you're gonna want to do it again. And then the more you get addicted to it, the more you might set you back further. So a lot of people get tricked. They fall for this. They follow their impulse. They follow their um, their emotions, and then they take serious risk, and that could set them back years and years in advance. But if you know how to play the game right, you can actually use leverage on a good side. So we're going to talk about that as well. And let me say this: the saying, by the time you feel the full effect of the recession, it will be over. Absolutely, man. Absolutely. Definitely, that's where we are right now. So, where are we right now in the market? If we're looking at the market right now, we're looking at the S&P 500. Reason why I love to look at the S&P 500 to understand what's going on the macro aspect, it's basically, it's basically to see what is the bigger trend is saying. And for a couple of weeks now, since January, we've been on a downtrend. All right. You can see it very clearly right here. And my prediction is we're going to be testing previous support, right? So eventually we're going to be heading that way right here, maybe around September, October, if the trend continues to follow at this rate. But yes, it's been going down for a while. That shows you a clear top. And then if we resist this area for too long, it's going to have a nice head and shoulder on the macro aspect, which is definitely a bearish term for the next couple of months. But we'll wait and see what's going on. But for now, we're going to see what's going to happen on this support here. So stock market is not doing so well, downtrend for last couple of weeks. Same thing here. We can looking at the volatility index. Lately, it's been doing some wide range of variety here. So if we're looking at the beginning of the year, January, lots of swings, right? And this was the war area right here, February, March, April. So lots of volatility right here, and now it's quite compared to what it was earlier this year. You can looking at the Nasdaq, same trend as the S&P 500. The US dollars, it's actually doing well, and that's not necessarily a good sign because at first it might look like it's doing well, it's the best to keep your money there. But what you're not factoring is it's inflation, right? You're not factoring inflation. And another reason why it's been going well since the beginning of the year is because, well, people that are selling all these stocks and they're going on a downside, they're selling that in US dollars. So that's why the US dollar is going up as the market is going down. But again, on a short term, it's a good move. On a long term, it's not as good because definitely trying to fight inflation right now. The Fed is kind of struggling to maintain the balance between fighting inflation and not triggering a wide, massive panic on the market. But eventually, it will catch up. So that's what's going on in the market right now. If we're looking at commodities, we can looking at commodities. It's not necessarily going. It's, crude oil has been going down in the last 3 days. That's surprising. um, gold, gold is not doing much. Yeah, so if the US dollar is gonna do well, gold is gonna go down. So that's why you see this trend since March. It's been going on a downward. And Bitcoin, well, we're going to be talking about that today as well. Bitcoins and cryptocurrencies in general. Well, this one has been severely impacted since the beginning of the year, right then and there. Bitcoin is down. Well, that's a lot of percentage that Bitcoin is down right here. Let me show you what I mean. We can calculate the percentage, right? Since what January? January is about right here. Look at that. This is 60% down from its top since January. So this is quite a drop already. And we'll see where that leads. We're testing a very important level right now. Remember, I talked about that in my previous stream. We're talking about this level here around the 20,000. This is a very important level. And if we break this, we close on a weekly candle below the 19,000. We're going to be testing 12,000. So it's going to be very interesting to see what Bitcoin is going to do next couple of weeks. But chances are, based on how the market is going, there is a lot more odds that we're going to touch the 12,000 versus staying here. But either way, the reason why I circled this yellow is because you don't wait for it to break it down here. This is your time to buy cryptocurrencies. This yellow zone right here, this is definitely a great time to be buying cryptocurrencies, regardless of what had decide to happen next. You'll still be on the long term. You're still going to have great buying opportunities. So do not wait for that. So that's basically what's happening in the market in a nutshell. Crypto in general are going down. If we're looking at the total market cap of cryptocurrencies, we're less than $1 trillion now. We used to be like a topping 2.5, $2.8 trillion in a bull run. So you could see that this pattern is broken. Whenever there is a triangle, it's a end decisions. Market could do a move on the upside or the downside, and then we have broken the pattern around 70% of the triangle to go on the downside, which is typically normal. About 70%, you're going to see a decision, and that's what happened since. So we've been seeing a downtrend. We're less than $1 trillion in Bitcoin market, and then the Bitcoin dominance chart, 43% of that Bitcoin market is, 43% of that cryptocurrency market is on Bitcoin alone. And then the altcoins um, are not necessarily doing well, but Bitcoin also is not doing well. So that's why it's kind of going sideways. But eventually, I think Bitcoin will get more dominance over time. And that's usually the pattern that happens in a bear market. Um, Bitcoins get more dominance, and then towards the end of the bear market, beginning of the bull market, that's when Bitcoin starts losing some of its dominance again. But we're seeing more and more technologies when it comes to altcoins. So we don't know what's going to be happening in the next 2 years, but usually that's the pattern. So eventually we should expect to see a 50% market dominance at some point once Bitcoin starts to stabilize in pricing. So in a nutshell, that's how the market is going. And today again we're gonna talk about leverage and what does leverage has to do with the market. All right. Well, for starters, leverage. What is leverage trading? Okay. So leverage trading is one of the good things I love to do is to go on Investopedia. It has a very nicely way of synthesizing the definitions. Leverage involve borrowing a certain amount. Actually, let me make it bigger for you guys so you could see. All right. So leverage involves borrowing a certain amount of the money needed to invest in something. All right. So you could leverage in anything that has to do with investment. It doesn't have to be just the stock market, but actually brokers that sells you stocks, they make it easy for you to leverage their money and buying stocks, and then they can make some profit on you too as well. So leverage involves borrowing a certain amount of the money needed to invest in something. You could leverage in forex, which is very popular. The case of forex, money is usually borrowed from a broker. So it's the same thing for stocks. It's the same things if you want to short the market. It's the same thing if you want to um, bet on a long position, right? That's how they call it. So a key takeaway you can take from leverage trading is leverage is used to borrow fund to increase one's trading position beyond what would be available from their cash balances. All right. So let's say you only had $100 to invest in. Well, you can buy $100 worth of assets. However, if you can leverage 10 to 1, right? If you can leverage, if you find someone who's willing to give you 10 times the money you have, so that you can only, if you decide to invest in stocks, for example, or maybe options, well, that means you're buying $1,000 worth of assets just by having $100. Another way to say it is you're controlling $1,000 worth of assets only with $100, right? It's a simple concept when it comes to investing. You can do it in real estate. It's no different than going to the bank, right? You're asking for a mortgage. You're technically leveraging the mortgage, the money that's coming from the bank to buy an asset, a real estate, right? If the mortgage is let's say $500,000, you only have 20% of that. Maybe you only have 10% of that, and then you're leveraging the money from the bank to pay off the house so that it can be for you, but you're controlling the house. You can do whatever you want. You can rent it. Maybe you can increase the value of the house so that it's become worth more. And then at the point, if you sell it for let's say 700,000, well, you can collect at least 200,000 profit from that, right? So that's basically the same concept, but in stocks and cryptocurrencies as well. So that's what leverage trading is. Very popular in forex. Very popular. I don't think you do forex without leveraging at all. But it's starting to be a problem in the crypto market as well. And again, the crypto market is very young, So there's a lot of things that are being experimenting on that, but you're going to hear the problem that has to do with cryptocurrencies. But before I go, let me go very quickly and address the questions in the chat. Thank you for being active, Mr. Peter Investor. Let's see. So, is there any correlation to the stock market? Yes, I believe we just talked about that. But yes, there is a correlation. Basically, if brokers in general love to kind of like give you their money to so that they can make more money from you, because the odds are you're most likely going to lose than you're going to win, right? Actually, 90% of investors lose money on the market. So if they are being compelled to do it because they think they're going to make them be bigger profit, well, are against them. So for the small percentage that are actually making lots of money with the leverage money, which the brokers is not losing money when you do leverage, but they can also get your, basically their goal is to get your, if you're leveraging 10 to 1, their goal is to get your ones to add to their 10. That's their goals, right? So it's definitely a correlation in bull runs. A lot of people are tempted to use leverage to maximize their gain, but in bear markets, it could be devastating for them, and also the devastating for financial institution if they don't manage themselves good enough. But yes, there is a correlation with the stock market. You can use leverage in any markets that allows you to do so. And there is no more cheap money by the Fed. Yes, the Fed has to fight inflation. They have to make sure that they break the backs of inflation, or at least slow it down, because right now inflation is raging. It's raging on its way up, right? So that's basically what leverage trading is: borrowing money so that you can make more money. All right, but key takeaway is the odds are not always in your favor. So what is the benefit, however, of leverage trading? In the short term, leverage trading multiplies your income. It multiplies the return on your initial investments. For example, I was giving you the example of 10 to 1 leverage, right? If you have 10, if you have actually, yeah, if you have $10 and then I decide to give you $90, right? You'll be able to buy something that is worth $100. But my condition is I'm only giving you $90 if you always have $10 in a pot, right? So if you remove your $10, you will lose the $90. But if you keep it, you're going to have that $90, and overall is going to add up to $100, right? So that's the rule I would set up with you, as the broker would allow you to do a leverage trading. And what does that allow you to do? Well, it allows you to go and invest that $100 into buying an asset. Well, if you're good enough to understand timing, to understand the market, to understand when to get in, when to get out, what if you could take that $100 and you multiply that by 2 or 3? Let's say you bring $300, right? So you still have to pay back the 90 that you borrow from me. So you pay that back, right? And then you keep the rest. So if you made $300 in profit, well, basically you pay back $90, so you have $210, and then you can keep the $210. But remember, at the beginning, you only had $10. Now, if you didn't do leverage, you would have done the same investment and you would have taken your $10 and then you would have had $30. It's not much. In a ROI perspective, it's great. That's 300%. I mean, that's unheard of, right? It's very rare to have 200% in an investment. But in terms of cash, in terms of value, it's just $10 going to $30. So, right, if you could barely buy diapers, actually, diapers do not cost $10, but if you could barely buy a bottle of water, well, now you can barely buy 3 bottles of water with that. So, whereas if with that same $10, if you had done leverage on it, well, it would allow you to collect $210 on the same investment. So that's why people freaks out when they hear about leverage investment. And now you could it raise a level of emotion in you, which is actually very dangerous when it comes to investing, because the first emotion that it invokes from you is greed. All right, greed. For those who don't know, there is a greed and fear index. Right, there's a greed and fear index. Let me see if I can find it for you. From the crypto market, you'll be able to see it. But here we go. I have it right here. Cryptos. I'm going to share it with you. Look at this, guys. Look at this. Look at this, guys. There's a fear and greed index, because whenever there is greed, market is booming, market is going high, and around this high level of greed, people starts looking at leverage to be more greedy, right? If everything is going up, and then next thing you know, you put $10 in, you got $30 next day from in cryptocurrencies, which can happen. You sleep, you wake up, you get a lot more money. Then next thing you know, that continues to happen. It happens Monday, it happens Tuesday, it happens Wednesday and Thursday. And Friday, you're like, man, if I had to did some leverage, I would have way more money, right? You would be in the greed more. And that's what happens in the greed area right here, guys. People are getting greedy. They are starting to thinking of making more money. And all investors starts thinking about it. But what distinguishes the good investors versus the bad investors is their level of controlling their emotions. And that's why only 10% of investors makes money, because they can control their emotion of greed and decide not to actually expose their risk. All right. Not to expose their risk. And we're going to talk about that later. But that's basically what happens in trading, is when next thing you know, you increase the amount of income that you can make from a positive investment. It invokes a level of greed emotion in you, and that this is all human beings. Again, the only difference between the good ones and the bad ones, or the great investors versus the crappy investors, is their control of that emotion that always comes in. All right, now the problem with the leverage trading is what happens is when the market goes down, or it happens against what you expected. So you bet that the market was going to go up. Instead, there is an event that happens, it decides to go down. So what happens in scenarios like that is, remember I was telling you, if I'm giving you $90 and you have $10, I always want to see your $10 in. Okay. So basically with $100, if your investments goes down by more than 10%, then technically the value of your money disappears, right? So if you invested $100, right, in a stock, and the investment went down 10% or 11%, well, all your money is gone, right? All your money would be gone, because if you decide to sell at that moment right there, well, you would be down 89%. Sorry, you would be down 11%. So that 11% takes all of your money down plus 1% from the borrowed money. So the lender of that money will not allow this to happen. They want to make sure they always get their money back. So these people do not lose money. And this is why there is a danger in leverage trading, because the risk is all on you. It is not on the lender. The lender is giving you the money, but their condition is your part should always be in. The value of your part should always be in. The minute the market goes against your level, if your money disappears, they automatically sell your position. They collect their money back, right? And then your money is lost. And that's how brokers are making tons of money from the market, because most people will go and invest, and then next thing you know, they had bad timing. 90% of people have bad timing, and then the market changed position so fast that most of them don't even have time to sell it in time to collect some of their money, right? So that's the danger of leverage trading. The leverage trading is, at the end of the day, all the risk is on your money. Only your money is being risked, not the money of the broker. And because of that, they do not lose their money, but you would lose all your money, and they control it over it. They have control over it for you. So again, you have control over it to decide when you want to sell it. But the minute it goes down and all your money is gone, then all the control goes to them, and then they can decide to cancel you out of that position. Next thing you know, you lose all that money. Even though you knew that if you had wait long enough, it would have changed position, they don't care, right? That's not their problem. Their problem, that's your problem. Their problem is, how do I guarantee that $90 that I give you initially is for me, it steals for me? And then they're always looking at not the future value, not the past value, the current value. That's what is more important to them. And that's another way, a great way as well, to leverage, to measure the risk, right? In investments, nothing is more important than the current value of today's money, right? It is more favorable for an investor to collect profit now versus hope that they can get profit in the future. Of course, they are willing to risk a certain amount, but the value of today's money is always more preferable than risking, because the minute you leave it in the market, there is a level of risk. Whereas if you cash out now, it's total money you cash out now. There is no risk, right? If you cash out, you got out of the risk. So that's how a financial institution thinks. They thinks of securing money as much as possible and reducing risk. All right, reducing risk, which can play a huge factor when it comes to also protecting yourself against leverage trading. And we're going to be talking about that. I'm only going to keep this within an hour today, but I see more people in the chat. Salute to you, the intentional millionaire. Go check out his channel, guys. He had a great stream today. I saw the title. I went to it very quick, but I'm going to listen to it in further details later today. But the intentional millionaire had a great stream, I believe, today, talking about the purpose of writing your will, right? And even some of our successful actors in our community are making mistakes where they're not doing that. So that can cause a lot of problem with your family. Trust me, I've lived through this. It is not fun. So definitely check out this stream today. We're also trying to keep it short. We used to do those long stroking streams, but we're going to keep things shorter these days. Summer is out there, so we gotta go and enjoy, right? So salute to you, Peter Investor, and thank you for being here. Gordon Gecko in the movie Wall Street. Yes, absolutely, super conservative. Let me see. Salute, Natasha Vincent. How are you doing? Hello. Nice to see you here. Nice to see you, everyone. All right, so I have a video ready for you. We're going to listen to it, okay? And I want to show you how far the leverage trading can go. And also, now that you understand what leverage trading is, there are certain things, certain words that you may listen to news that's going to make more sense to you guys. So without further ado, let me share my screen with you, and then we're going to be talking about that. Give me a second. I believe, give me a one if you can hear the sound. Give me a one.
And welcome back to the CNBC special, Crypto Night in America. We are continuing to follow breaking news. Voyager Digital announced.
Could you guys hear that? Give me a one if you can hear. Give me a one if you can hear. But yeah, we're going to be talking about this video here. Perfect. Thank you very much. Humid. You, Natasha is saying it's very hot and humid out here. Oh man, if you could see, I'm looking at the the sunset right here. It's pretty good. Moving. Hey, and come visit me in my place, man. I'm pretty cold actually right now, so I have those chilling AC going on. So definitely helps. But yeah, guys, we're going to be talking about this video right here because there's many things that can help you understand. First, what's going on in the market, why there is many major aspect on the crypto market that's pushing the market down, but leveraging is one of them, and you're going to see the effect of that. And that's usually what happens in a kind of like a bubble. When there is a bubble, people leverage a lot more than normal, right? So that they can but like they can grow that bubble. So that usually comes with leverage money. And again, remember, leverage money, they don't necessarily lose their money. It's the people that that takes the leverage that has all the risk. So, but just listen to this video, you'll understand how far can this go. All right, so we're going to react to it. It's only a couple minutes long, and then we'll get to it.
Today, it's the latest crypto firm to suspend withdrawals, deposits, and trading. Voyager's exposure to the embattled crypto hedge fund Three Arrows Capital includes 15,250 Bitcoin and $350 million worth of USDC. And here to shed some light on what forced liquidation of Three Arrows means for creditors like Voyager is Mackenzie Sagalos. Mackenzie, how have Three Arrows issues impacted the broader crypto community?
So the crypto market is falling apart right now, Frank, and the latest cash.
All right, guys. So you heard it. Voyager Alt is a financial institution, and they basically halt um, trading. They basically halt trading. And you heard they were a crypto firm. They had many millions, hundreds of millions dollars worth of bitcoins, same as USDC, right? Which Tether is being on pressure right now, is being attacked on all level. But so far, Tether is hanging out there. Which I made a prediction in my Discord last year that when we were going to be at the bear market, USDT was going to be attacked. But I thought it was going to be the government, but it turns out it's not the government yet. But man, they're putting a lot of pressure on USDT right now. And when there is sales, people are selling their cryptocurrencies to stable coin right now. There a lot of that is going to USDT. But basically, Voyager halt right here is basically they had to kind of like almost in the brink of bankruptcy right here, right? Stop withdrawals, lots of assets in cryptocurrencies, and now we're going to listen to why and more details about why this is happening.
Casualty is Voyager Digital. Voyager's big announcement today comes just a few days after the once very prominent crypto hedge fund Three Arrows Capital defaulted on a loan to Voyager worth more than $670 million. Now, at the time, Voyager said, hey, no problem. Alameda Ventures has already committed to $500 million in financing. We're all good. But clearly, that wasn't enough to keep things running as usual. And so the fallout.
So you heard it, guys. They borrow a lot of money. We're talking about $600 million as money being borrowed, right? But there are cryptocurrency firm investing firms. So what are you going to do with that borrow money? Invest all of it in cryptocurrency. So we're talking about $10 in my previous example. These guys are talking about hundreds of millions dollars that they're leveraging, right? Leveraging other people's money to go and try to make a profit. And this is what happens when you go on a bull run, right? When you go on a bull run like this, you're making months and months and months of going up, right? If we're looking at cryptocurrencies, guys, this is what happens. Imagine you're here, you're seeing every day market is going up and it's doubling, tripling. So next thing you know, when you're around here, you're like, well, I already missed all that. It's going to make you change your mindset about low risk. And it's like, if you had made that choice earlier, you would have multiplied your gains by now. So people are like, well, can I at least make something? And these investing firms are investing hundreds of millions of dollars in leverage, putting it on cryptocurrencies like Bitcoin, right? But again, my question goes, what happens when the market switch direction? What happens when the market switch direction? And again, you're going to lose the money you have going in. The people that are borrowing that money from you, they're going to want you to take some actions to protect their money, right? They don't care about your money. They take care about their money. And this, we're seeing the total extreme of that happening right here. And notice that at the beginning of the video, three arrows is the latest one, right? Because it's not the only one that's been affected by leverage trading where it goes wrong. This is just the latest one. So many crypto firms are doing the same thing, borrowing money on the bull run, don't mastering the timing, and then basically lose hundreds of millions on the process.
From the forced liquidation, Ventures has already committed to $500 million in financing. We're all good, but clearly that wasn't enough to keep things running as usual. And so the fallout from the forced liquidation of Three Arrows Capital, or 3AC as it's also called, has begun. Remember, just a few months ago, 3AC had $10 billion in assets under management. Now it's failing to meet margin calls, liquidating its holdings by court order after failing to repay its creditors. I mean, it's even being reprimanded by Singapore's central bank, which is where the fund is based, for providing false information and exceeding the maximum amount of money that it was allowed to manage. This is why there are such big concerns about a knock-on effect across the crypto market more broadly, exactly like what we saw today.
So, Mac, I've been following some of your reporting.
So again, big news, guys, big news. It's again, this is just the latest, all right? But notice how fast things can change. This money that they borrow allow them to access close to $10 billion in money that they're managing, right? But things can change very fast. And we're noticing this, the effect of this, especially once the war started, right? Big, that's at the end of the day, guys, this is why I talk in my course. Shout out to my wealth engineering course. I have a course where I detail exactly all the things you need to know when it comes to investing your money. All right. One of the things I talk about in my course is understand the macro aspect of the economy, all right? How the big macro aspect can affect the small direction of the market, right? So basically, macro aspect is affecting the world right now is the war in Ukraine, right? This creates a lot of pressure in many different places, right? So some of these pressures can control an entire market, including cryptocurrencies. It's not going to do well, and that can happen earlier than you're expecting, right? So if you're making a bet on a long term and then these events happen, they have control over your market, they're going to shift the direction of your market. So if you're and remember, this is leverage, right? This is risk. You're exposing yourself to more risk, and you cannot necessarily sell them fast enough as they're dropping very fast, right? So that's what's happening with crypto investing firms like this. They're borrowing a lot of money, trying to leverage the bull run that's been happening weeks over weeks over weeks and going upside. The market changes, and the next thing you know, they cannot pay their creditors. Their creditors are making lawsuits, forcing them by law order, as she mentioned. She mentioned that they had to close their position by law order because they failed to pay their creditors. Because the creditors is going to make whatever they can to not lose their money, but that usually going to happen after your part is already out of the market. So at the end of the day, when you sell that position, you pay off the creditors, you got nothing in your pocket, right? You got nothing in your pocket and you're gone. And this is why this firm right here has to basically stop all types of tradings, right? Liquidate assets. They had $10 billion in management at some point, but now they might not be in business in a couple of months, right? So this is just an extreme case, and we're talking about millions. But I want you to think about it because it's no different than leveraging 10 to 1 or 100 to 1, which is very dangerous. But some people in forex right now, some people in cryptocurrencies as well, they are being tempted to leverage 100 to 1. You put $1 in, you have access to $100. But the market goes down 1%, your money is out, you lose your position. See what I'm saying? Of course, if it goes on the upside, you can make a lot of money. But on a 1% change in cryptocurrencies can happen every second. Like every second, the market can move 1%. right? So you can lose your money just like that. And but I'm not saying this is exactly what happened to these guys, but what I'm saying is it's no different. It's basically the market can shift direction on you, and then that money that you invested can go on, and then you're gonna hear her say it by herself that it was leverage that created this move. Just watch.
Three Arrows, one of the biggest crypto hedge funds, widely respected. What went wrong here? Was it just the price drop, or did they also make some mistakes?
Right. So 3AC has been around for a decade, and it really was this darling of the bull market in 2021. But what we've seen in the last few months is this sort of perfect storm of black swan events. The price of cryptocurrencies has plummeted, and that affected any firms with exposure to crypto, but especially 3AC, which had this highly leveraged trading strategy that was unsustainable as the price of cryptocurrencies dropped. And then in May, you had the implosion of a very popular US dollar peg stablecoin project called UST. Three Arrows Capital had exposure to that project, reportedly lost more than $200 million. So it's just been this string of bad luck for the fund.
A lot to
You heard it first. You heard it, guys. Shout out to Carl Black. How are you doing? Get the likes up. Thank you very much. But here's what I want you guys to understand, right? And again, these are pros. There is a there is a reason why I'm showing you this specific video, right? These are pros. These are people that are making money by investing, right? So when I say 90% of people lose money, only 10% are succeeding. These people are making a living out of succeeding in the market, in investing money. So, right? So these are professional. And even them were tempted to do, and as she said, highly leveraged strategies to benefit from the massive run that the 2021 bull run cryptocurrencies was providing. But if you understand the market cycles long enough, you know how long a market cycle is going to last, and you can plan for that. But if you're greedy, sometimes it can obscure you from those strategies, from those logical approach, so of low risk approach to the market. And the next thing you know, you expose yourself more than you can chew. And there is two black swan event that happened specifically that affected this specific firm right here. First, of course, you had the war, everything started to change direction. And then second, you also had exactly what happened with Luna. Luna, right? Luna crashed within days. Within days, Luna went one of the top 10 cryptocurrencies, crashed all the way to the bottom, and it was worthless. We're talking about like over $50 billion worth of of money just disappeared over the course of like 3-4 days. So it was one of the worst crashing cryptocurrencies ever. And listen to this, guys. This company right here, Three Arrows, they had big position in leverage to Luna. So not only you have big position in Luna, but you also had your position is not all your money. It's also the creditor's money. And you're losing all that money within 2-3 days. You don't have time to sell it fast enough. And the market just changed on you, right? This is just one black event. On top of that, since the beginning of the year, bear market happened a lot sooner than expected. Boom, right? Another pressure. So that's what happens. Even professionals who are being operational for decades, right? Three Arrows has been there for a long time, as she said. Decades. It's not just you that are starting with cryptocurrency investing this year, last year, 2 years ago. These are people that are having making their life on investing, and even them was greedy enough to expose themselves, confident enough, and to expose themselves in high risk, and then they end up destroying 10 decades worth of work in basically a couple months. So if them can fail to this magnitude, is trading, leverage trading is for you? I don't know. You're an adult. You are free to decide on your own. But you be aware of the dangers of leverage trading. All right. Be aware of the dangers of leverage trading, because it sounds good at first. Okay. It sounds very good at first. It sounds very appealing at first. But remember, the creditors will do whatever it takes to protect their money, and most of the times they will get their money. At the end of the day, your money is going to lose. And then because you're leveraging, they have control over your money, right? Once your part is out, their part, they're not going to keep it out and they're going to take control over it. So let me go very quickly because we're going to talk about also how can you use leverage. I know I've been talking about dangers, but it doesn't mean it's all bad. There are certain things you can do to do some benefit, and we can learn from people like this. We can learn from experiences like this to strategize on how it can benefit us, right? Because not everything is black and white. There's always this gray area, which is a little bit of the goods and a little bit of the bad. But if you can limit your risk, you reduce your risk and maximize your profit regardless. So why not at least consider that option? It may not be your first move, but it could be a move down the line that you should absolutely think about. All right. So before I start very quickly, let's go to see what Carl Black is saying. That's high volume margin trades. Absolutely. Yes. The thing is, even if you try to go anytime you go on the stock or crypto market, you're competing against algorithm that are doing high volume with a short amount of trade anyway, right? Sometimes these people they're running their own from AI trading bots, but you again the macro aspect, something like Luna, right? Who could have predicted $50 billion worth of cryptocurrency would disappear overnight? Well, it happens. This is what we call a black swan. It's something that you never imagine happen, just happens. And then the prediction that you thought you made that was going to make you rich turns out it just kills you, and it can bring you further back than you expected. Right. This is how the wealthy elites of the past gain massive wealth. They called all the margin loans in the middle of the crash. Exactly. It's a great yeah, that's a great point right here. They and it's the same thing in the stock market, right? It's the same thing in the stock market. In the up market, everything goes high. They make money. You pay them back because they go high. If you happen to keep your position, well, they still collect their money because they can control when to sell it, right? Shout out to Natasha Vincent. Like JC's shirt. Thank you. You can get your own. Thank you very much. Thank you very much, Natasha, for shouting out. Yes, your wealth matters. You should protect it if by any means necessary, even from leverage trading. But at the same time, you can use that to your benefit too. Absolutely not. I am better using other people's for multiplex real estate using the rental income to pay down debt. Absolutely. Then this is one of the points I was going to bring up tonight. You also have to competing with traders running their home-based hedge fund from their basement. Yes, great point. But even them, they're not as efficient as those Wall Street firms that are doing like microseconds trading, right? And these people, they can see the bigger trend happens way before you can, right? Way before you can, and they're making money of all that, right? But I love this point right here because that's a good segue to the next point I was going to bring before I close the stream. How do you maximize your profit while you reduce your risk? Is one of the things you can do is you invest in low risk investment. Now, if you let's say you don't want to go to real estate yet, one of the ways you could do that is with options, right? Option trading is a way that you can limit your risk and still leverage, still use leverage money. Usually in options, you can get 2 to 1, 3 to 1 max. Like and then when you have one options, you can still control in the stock market. If you have one options, you control hundreds stocks, right? If you have one option of Tesla, you control 100 stocks of Tesla, right? And then the only amount you can lose is basically the amount you invest in, but the amount you can gain is basically the profit from each of the stocks that you controls within that option. So it's still a nice way to reduce the risk and still expose yourself to a good trend that can and make you some good money. So option is one way to go because it's one way to make sure that there is no way that you can lose more than that, more than what you're investing. And then now it becomes up to you to only invest what you're willing to lose. But you can make some great strategies with options. Another way that you can do is, and that's my favorite way, is use leverage to do low risk investments. All right. You lose high leverage and then you go low risk investments. Now it doesn't mean the low risk investment cannot go wrong, but if you use high leverage, just like Mr. Carl Black says, you can find a way to get cash flow. High leverage gives you a higher properties, bigger assets that gives more return in your pocket. You collect the cash flow, and then you slowly pay off the loan that you're using, right? So this is still a level of leverage, but it's much better than going on the stock market, right? Going on the stock market where there is less control over your money. You're dependent on too many variables that can shift the market in any direction that is against yours, right? So you want to have in it can happen in a market, in a real estate market as well, but the real estate market is much slower than the stock market or definitely the crypto market, right? So a great way that you can reduce your risk and still expose yourself to some leverage so you could maximize your income is going on an asset that is extremely low risk. Get understand the timing. We talk about that in the course wealth engineering. Even in real estate there are some timing you should be aware of, but at least that with the multiplex there is always going to be a demand for that, so that has real value. Real intrinsic value comes from the desire of people to want to put their money in to buy what you're offering, and the multiplex is offering something fundamental to just life, is shelter, right? Especially in North America, it can get cold. If you don't have a way to keep yourself warm, or you can shout out to Natasha. If you don't have a place where you can get some clean AC, right? Then you're going to suffer either from heat, too much heat, or not enough heat, right? So definitely you want to get yourself a proper shelter, nice shelter, right, with a heating system and cooling system. And everyone's gonna want that. Everyone wants that to a certain degree. Even the ones that can't afford it, they want it. So that's what you want. You want to invest in something that people want, so you're always going to have a demand for it. And that's another great way to do leverage, right? One way that I'm thinking about right now, and I'm actually looking into it, and I'm doing more research, and that's kind of like the next phase for my growth as an investor, is so I've done this, I've invested in real estate, I've invested in stocks. I'm kind of looking for ways now to leverage in business. Now this can also be very risky. A business can be as risky as the stock market, but I found a way that I can actually do it and reduce the risk in business. And one way to do that is just invest in business that are already successful, right? So that's a proven system, already successful, already providing cash flow. And then if I can borrow some money, putting on top of my own money to buy that asset. And the other thing I'm adding to it is I'm thinking of ways to grow that business faster. So I don't want to buy the business and then it doesn't grow, it just stays the same or grows slowly. I'm looking for ways to at least double the size of the business by the time I own it. So that way I can pay off my loan, the leverage faster, and then collect more income on the way. So if I do a business, if I see a business like that, that's something that is very interesting. And if it was just for me to collect enough money to buy it on my own, it would take too long. So in that way, it's very appealing to start looking for someone else's money. You put that on top of yours. You will study the level of risk into it as well. You at least provide some income, some cash flow that you can use to pay off the debt, and you can focus basically on growing that business even bigger. That way you can pay off your debt faster. This is much of a safer route than going and investing and on leverage in cryptocurrencies. And please do not do anything like 100x leverage. This is not good. 100x leverage It's going to bring you to bankruptcy way faster than you expected. Don't fall for the greedy aspect of those investing. They're playing on your emotions, right? Again, the market can shift 1% at any day in your sleeps, and that would basically lose your initial investment. Whereas if you go on a real estate, for example, or if you go on a cash flow positive business, that is that people are buying, there are huge demand for it, your risk is less, you're less exposed, your risk level exposure is a lot less than the stock market. So these are things that you should consider. Definitely agree with Carl Black right here with his comment. Multiplex, definitely a great way. It's the same concepts. You borrowing other people's money, put it on top of yours to control a bigger assets that can put some money in your pocket. But we're talking about different time frame here. Stock market, things are shifting way faster. Crypto market is one of the fastest market ever, so things are shifting too fast. Real estate market, crypto market is very fast. Real estate is very slow, right? Things are moving slower, and in business, things can be slow or fast, but definitely not the level of stock market. So, with that said, that's definitely the points I wanted to address today. Oh, look at Natasha, man. It's very humid, eh? Don't worry, man. Hey, I would invite you to my place. It's pretty chill right here. But shout out to you. Shout out to you. Pre-IPO or become the VC angel investor. This is not as low risk as you think. This is actually one of the riskiest way to invest in. Trust me, I know. I did startup myself. I started two companies as a startups, meaning ideas that hasn't been proven in the market. You have to basically develop a proven system. That's what a startup is. It's basically developing the system until it becomes sustainable so that it can pay itself off. And then once you get to that step, you're no longer a startup. Okay. But many startups fails for, I would say, one VC can invest in 30 different startups before one can make its money back. But sometimes the money that you make in one can pay off for all the money that you lost on the other startups, right? But it's actually a very risky business model to make money. And that's definitely not the first route a young investor should think about. Definitely, if you don't know what to do with it, go with real estate. Definitely a easier way to go versus a startup right away. But once you start making profit in other ways, and if you have more money than you need, and there's something that you know, a business you know well, that then yeah, I wouldn't consider invest in something like that in pre-IPO level. Thing is, when you invest in pre-IPO, you don't know if the IPO will ever get there. You see what I'm saying? So it's you're taking a risk of you're hoping that it gets to IPO, but it may never get there, right? So that's where the risk comes in, and your money can be stuck for a very long time. So you don't want to, as young investors, this is not the first route for you. But great point right here, Natasha. Shout out to you, and thank you for sharing. I really like the minimum 2x impact idea before a business investments. Yeah. It's something that I'm considering right now. I've been looking different businesses right now, looking for opportunities. But definitely strategy when I put all the X and O's, it's the cheaper way, or at least it's the lower risk you can afford and still maximize your profit. And me, I always think of being efficiency. So I always think I'm like, okay, if I could basically get a business and then increase the size by double in at least 2 or 3 years, and that's just the perfect combination right here, and I can just repeat, rinse and repeat, right? So definitely looking into that right now. Scaling the business through automation, yes, there are great ways to do that. Absolutely, can definitely buy more time, reduce costs, reduce expenses. Definitely something to consider. Carl Black, you can buy online businesses, but you must learn the skills to operate it. A lot of big aggregator are buying up established e-commerce operation. Yes, I am seeing that. I am seeing that as we speak. Because a lot of the businesses that I'm looking into are online businesses, but I don't know. I don't know. Me, I don't know. I like. There's something I like about a physical business that has employees, that has something physical to offer, because it's a lot harder to replicate, right? It gives you some level of, whereas the online businesses, a lot of them it's are easier to replicate, right? So more competitors, and you want to go somewhere where there's least competitor as possible, where you can be the kind of like the big fish in your area. So when there is something physical to this business, it gives a layer of resistance that slows others from getting there. So that's kind of the way I'm thinking about it. Again, that's part of the risk of the business as well. Will the competitors kick you out of business? So these are all part of this. But hey, I think of it as a game, and it's a fun game. And in a game, you can win, you can lose. The bigger part of it is, can you maintain your wealth in a way that allows you to play those games, right? If your business falls and you go bankrupt, like I'm pretty sure those people, right? Three arrows, those people that have 10 years worth of experience in investing in stocks and cryptos, going aggressively, leveraging other people's money. I bet you their accounts, their personal accounts are still positive, right? They're not risking their foundation. They're risking what they add on top of that foundation, but not the foundation itself. So despite their business goes down, their personal account are still flourishing. So that's the way to do it. So you don't want to start risking in startups, in online businesses, thing like that, your foundation money. Your foundation money should be in something that is low risk, right? Something like real estate, maybe something that can be your cash flow, something low risk, low return. And then from there, you multiply that money to something on another route like business or real estate or IPO if you want to go that route, etc. So that's basically what I wanted to talk about. Natasha Vincent sharing the link. Thank you very much for sharing the link. Very active member on the Discord group. And then, actually, guys, for those who are part of my exclusive Discord, I've been slacking a little bit lately because I've been very busy on my other work that I'm doing. But yesterday, I post a lot of interesting documents, to say the least, research documents of macro aspects where the market is going in the next couple of years. So, great reports, great tools that you can use, because now market is at a discount, right? We have the stock market going down, right? Everything is going down, so this offers buying opportunities, right? When the stock market is going down like that, and eventually, if we break this, we might go even lower. This offers great investment that has strong, um, like there has huge potential in the future to go up at a discount, right? So this is the best time to buy for long term. And then knowing what to buy, this is where my group comes in, because we share insiders information about the market research information. I paid at least $16,000 to acquire some of those information, guys. So make use of that, right? I'm sharing all that on the group for you guys. Make use of it. Take the time to read them, to go through them, to understand where those information comes in, the impact, right? Understand the impact of those technologies, those informations on the world, on the market, where the big trend is moving, and everything we discuss on the course. This is where you apply those knowledge. Is so definitely check it out on the group, Discord group. I posted a lot of report yesterday, and then I was going through them too. They're exciting to say the least. So definitely check it out. So I just wanted to say that. Thank you again, Natasha Vincent, for sharing the link. So again, there is a free version of the group, but if you want to go to the exclusive group where I share the insider knowledge, you need to get the course. And then it comes, I'm actually going to reopen that again, where you buy the course and then you get a free lifetime warranty, or you get a lifetime access to my Discord, but it won't be the same price, guys. Last year, the price I was having, I was giving it for free. So basically it won't be this time this year. So if you're interested, I'm going to launch that soon. and then you can get it, but it won't be the same price as last year. So definitely and think about that, because again, if you, that's how the market works, guys. Opportunity only comes in. If you missed it, then you're not necessarily going to get the same price at the same time. Well, with that said, guys, let me see more comments. Look into healthcare business or supply chain companies. I love, yeah, supply chain companies right now is a good point right here. Healthcare business, it might require a certain level of expertise that most people are not necessarily comfortable with. So again, it means also the barriers of entries are harder to get in, which could be an advantage. But I don't know if that will please many people, but that's still a great point. If you can go for that, go for it, right? Leverage money if you have to, and then invest in those markets. Again, right now everything is going low. Yes, care, great. But if we're talking about what people need, well, ed care is definitely on the top priority right here. Mm. How long? How long will the bargain last in this bear run? Margin, you mean? I'm not sure exactly what you mean by bargaining. Bargaining? The bargain. Well, hey, I don't know, man. It depends on how long the bear market lasts, right? But it depends on which market too. One thing for sure is you can look at the macro aspects. Crypto market is a lot easier for me to predict because it follows certain patterns. So far, even though we didn't reach the top of the market this year, the pattern in the timeline was exactly as predicted. So that's good. So that ways you can at least rely on that information to predict. And that's why I'm saying now is the time to buy, right? It's going to last from history. If history repeat itself in the crypto world, it's going to last at least 2 years. But just like we had a surprise with the bull run in this market, we may have a surprise in a bear run in the crypto market too. So it may, I don't know. Again, this I don't know. I don't have enough data to sustain this theory, but it's just a theory I have right now that the crypto bear market that we have may be shorter than we see in the past. Okay. So well, I don't know. We'll see. But it all depends on the big macro aspects and how they change. So after the election, we'll know better. We're going to see what's going to happen with Russia. There is also China and Taiwan that could get in the mix. So that could change the timeline for the bear market and make it even longer. But hey, again, some areas may actually have a bull market, or most areas are still in a bear market. And this is where you want to check the reports I have ready for you guys. Right? This is where you want to reach. You equip yourself with your information so that you can make smart decisions. That's way engineer works, and you are wealth engineers. All right. So thank you again, Natasha, for your participation here in Patreon. I'm actually going to remove that Patreon links because instead I'm going to offer the that in the Discord, and then it won't be one payment for a lifetime instead of multiple payments. So I'm definitely going to remove the Patreon, but I'm going to launch again that lifetime access to the Discord and share with you those reports, because man, those reports are juicy, full equipped with information, and you want to check it out. All right, guys. So that's it. We're about an hour in, and that's what I wanted to talk to you about today. Leverage, the dangers of leverage, how to protect yourself from leverage, and it's basically by investing in low risk, low investments, and then or you can go in real estate, which is technically still part of the low risk, low investments, low return. So yeah, definitely check into that. Be sure that don't fall for the greedy aspect of leverage trading. Yes, when it goes well, it can multiply your income very fast, but when it goes down, those creditors are going to do whatever it takes to save their money, but your money is going to be gone. And remember, you're going to lose access to that money once your part is out. Stay away from anything that says 100x leverage. I don't care what the market is. I don't care if it's guaranteed. Never get into that. Unless you're extremely good, and I'm talking about 10 years of experience, that's when you should start looking into 100x. And even people that are extremely like been doing it for so long, they do not do 100x. All right. So these the pros do not do 100x, and you don't need to do 100x when you all know what you're doing. All right. So definitely stay away from those things. 100x return on your investment, even 10x, guys. Do not stay away from that. Try to get maybe 2 3x leverage max, but only in options, maybe options only. And again, definitely know what you're doing before you get into things like that. And I would definitely consider doing something like low investments, low risk on, and then the market is not volatile at all, right? Very predictable. What about 1000x? Never heard 1000x leverage before, but hey, you never know, man. Some people might. If you get, think about it this way, guys. If look, let me try to answer this question another way. Okay, I mean, I know you're joking, but there is some wisdom in your question, in your joke, right? Look, guys, I want to show you something. Okay, based on this candle right here, the S&P 500, which is an index that tracks pretty much the entire market. This today it went up by 0.36%. Okay, so 0.36% it went up. Now, let's say you were following the news, CNBC is talking about recession. I'm talking about recession. Big YouTubers like Stefan Graham is talking about recession. Every 3 days, I see a video from Grant Stefan. The recession is here. The recession is here, right? And then you're like, well, you know what? If all those smart people are saying the recession is here, then definitely the recession must be here. All right. So, what I'm going to do is I'm going to take $1 and I'm going to do 1000x leverage. Sheesh. So just with $1, you're going to put and you're going to get $1,000 in your hand, right? And you're going to buy the S&P 500, which barely, let's say you could buy it in macro, like not a whole stock of the S&P 500, but a part of it, a third of it, let's say, slightly less than that. And then you bet that it was going down. You short the market on 1000x leverage. So, and you went down, right? Basically, if you do 1000x leverage, the market only needs to go not 1% up to get rid of your money, but less than 1% up to totally lose your money. In fact, it's going to be 0.1%. Right? If the market goes 0.1% on the upside, your entire money is gone. Right? And then the creditor is going to be like, well, if your money is gone, I'm not going to stay in this position for you. I'm going to sell that position for you and then collect my money back while you have your money both. At least you're smart enough to only invest $1. But look, we're talking about 0.1%, but this went 0.3%, 0.36% in one day. Right? So that's what I'm saying. 1000x, this is definitely not something you could do, because even in the stock market, which is relatively slow compared to the crypto market, things can move to 0.1% in a day, right? Things can move 2% in a day. Look at this candle, 2% in a day. This candle is 2.3% in a day, right? This candle is 3% in a day. Even in the stock market, and we're tracking the entire, like, not the top 500 companies in the world, and yet it's still going that way. So imagine you're in cryptocurrencies and you're doing something like 1000x. Your position might last barely a second before you lose your money. All right, I know it's a joke, but I wanted to at least show you why it's a danger. The more higher you go in leverage, the less, the lower your risk margin is, or should I say, the lower is your tolerance. You cannot tolerate many movement. If you had 10x, well, you can lose, the market has to go 10% before you lose your money. If you have 100x, the market has to go 1% before you lose your money, right? And if you go 1000x, 0.1% is more than enough for you to lose your money. So that's basically it, guys. Definitely don't do it. Don't do 10%. Don't do 100%. And do not do do not do 1000% if you can. I know you're joking, but it was a great point anyway to bring. Shout out to the ZSP. Let's go, no worries. But we were trying to get 1000x return on your investment. That's a great way to see it. And things like that can only come from like investing pre-IPOs and be on the right timing, right positions, or cryptocurrencies if you're very early. But that's it, guys. That's all the points I wanted to mention. Thank you for coming here. I know I'm going to have to go in a trip for work, but I'll find a way to get those streams going, find more topics to talk about. But with that said, guys, thank you very much for your time. Make sure you hit the like button, share the stream so that more people can join, and definitely join in on the Discord group so that we can talk and keep an eye on the market as this bear market is going on. With that said, shout out and see you on the next one.
Hey, it's all about wealth. It's all about wealth. Might be something that you're not used to. It's okay, cause I'm here to introduce you to concepts. Time to grow and make big moves. All about crypto, come see. Stocks in business, yes indeed. Got the info that you need. Hosted by my homie JC. Hey, yeah. Wealth engineering. Stacking and stacking it up. It's time to generate wealth. Till you living